energy efficiency of their home and finance the cost of the energy efficient package into their loan. And 2, energy efficient package improvements agreed by the borrower are based on the recommendations of a qualified energy rater tool, the Home Energy Rating System, or what we refer to as HERS. And 3, the energy efficient mortgage program recognizes improved energy efficiency of a home, increasing its affordability by reducing operating costs. Eligible costs. The borrower may finance up to 100% of the expense of the energy efficiency. The borrower may finance up to 100% of the expense of the effective energy package, and the loan amount may exceed the county limits by the cost of the EEM. Cost-effective, lower utility bills, conserving energy, and makes more income available for the mortgage payment. There's no need for a second appraisal. No additional down payment is required, nor is qualifying for the additional financing needed. Present value test is a statutory requirement. Therefore, you can't use the actual energy savings. The next slide, please. An FHA forward purchase, or these are the eligible mortgages. An FHA forward purchase or a refinance mortgage, including Streamline Refinances, a 203B, including condominiums, 203H, disaster loan, and 203K rehabilitation mortgages. And please note that this is not available for a cash-out refinance. Eligible properties. New and existing 1 to 4 family units, including condos and manufactured homes. EEM dollar amount is per the entire, The EEM dollar amount is per the entire property and not based on the per unit basis for multiple unit properties. So in other words, if you've got a 1 to 4 family, the dollar savings is on the entire property, not per unit. Okay. Now we'll discuss the Home Energy Rating System, or the HERS report. This is something that the borrower orders. They order the written Home Energy Rating report. The HERS report provides estimates of the cost of the improvements and the expected energy savings. And the HERS report must not be greater than 120 days old, and it can go as high as 180 days for 203K. The home energy report is actually given to the borrower and copied to the lender. So it's something that it's going to the borrower versus like the appraisal that's actually for the lender, and then a copy given to the buyer, or to the borrower, excuse me. Okay. The following is a list of who are qualified HERS raters. A utility company can be the local, state, or federal agencies, local, state, or federal agency designated for the purpose of providing HERS for residential properties, a nonprofit organization experienced in home energy ratings on residential properties. And then we also have here listed for you ResNet, which is a website that you can use to look up some of these. And the Department of Energy has a website that you can also use. Energy consultants from these sources may or may not use the HERS methodology. While many of these sources provide energy audits, the mortgagee must ensure that the report is in the HERS format. HERS raters may also be found on the Department of Energy's website, which is listed there for you. You may want to jot that down, or keep in mind that this will be on the archive website, so you can pick that up later on. Okay. The HERS report will have descriptions of the energy package, existing properties, cost-effective improvements to increase the energy savings, description of the energy features, including properties proposed and new construction cost-effective improvements to be included over and above the required 2000 International Energy Conservation Code. So if you're going to be doing any energy efficiency improvements, they'd have to be above this code, which is the new code for new construction. And here's another website that can be used to get what the codes are, the local code. FHA does not set fees for the energy, for the home rating report. However, when the fees must be considered customary and reasonable for the area. So if you start doing these, you'll want to get familiar with the fee for this report would be, and make sure that they're not above what would be normal and customary for your area. Okay, to continue. Underwriters must certify, and the certification would read, I certify that to the best of my knowledge and belief, the information contained in this report is true and accurate, and I understand that the information contained in this report may be used in connection with an application for an energy efficient mortgage to be insured by FHA of the U.S. Department of HUD. And so what you're doing is you're just certifying that this is a HERS report and that you know that it's going to be used for an EEM mortgage. This is not a certification done by the energy efficient rater. So this is something that you as the underwriter would do. Oh. Just a moment, please. I beg your pardon. I got that backwards. The certification comes from the HERS consultant, and you need to make sure as the underwriter that it's there. I apologize for that. So you'll have the certification should be on the report, and then you as the underwriter must verify that it is there. Okay? Okay, our next slide. Maximum allowable cost of the improvement. The cost of the energy efficient improvements that may be eligible for financing into the mortgage is the lesser of A or B as follows. The dollar amount of the cost-effective energy improvement plus the cost of the report and inspection, or the lesser of 5% of the value of the property, or 115% of the median area price for a single-family dwelling, or 150% of the conforming Freddie Mac limit. So you'll have the two-layer test of what you're allowed to finance into the mortgage. The cost of the energy efficiency. The Freddie Mac limit currently is $417,000 in most areas of the country. There is a reference for http://www.hud.gov /offices /HSG /SFH as in single family housing /EEM /energy
Hey, bro.
-R
Could you give this to Donna for me?
.CFM as in Mary. Please keep in mind that your maximum mortgage limit for an area may be exceeded by the cost of the energy efficient improvement. There is a mortgagee letter, 2009-18, which increases the amount of the allowable cost of the improvement. You can take a look at that. There's also a link to a spreadsheet that providing area median prices. It's been posted, and you'll have that website here. And I believe if you just want to put in 2012 rather than 2011 at the end of that website, you'll get the 2012 median prices. Okay. We have on the FHA connection an EEM calculator that will give you the maximum dollar amount of repairs that can be added back to the mortgage based on the lesser of the 5% of the property value, 115% of the median price, or 150% of the Freddie Mac conforming. Now, keep in mind, this is the maximum amount that you're allowed to use, not necessarily the amount that you will use. Those are still going to be based on the cost of the improvements or this. So it's between the two, whichever's the lower, the lesser of, okay? So what you'll do is you'll go to the screen in the FHA connection called the EEM calculator, which we have a copy of that up on the screen for you. And once you get there, if you just fill in the information of the FHA case number, the projected underwriting approval date, and the sales price. Now, for more information on this screen, you can click on the help link, which is in the upper right-hand corner.
But that's for my class.
And when you click on that, if you click on business background, that will give you, it'll tell you a little bit about what's happening with that. It'll explain it. This is available on most of the FHA connection pages. So it's just telling you the EEM calculator is used to determine the maximum mortgage per mortgagee letter, and it'll just go through and give you some information like that. Then if you go down to the bottom, it'll have another area that you can click on called processing. When you click on that, Elizabeth, I think we're already on slide 15 if you want to go ahead and go to there. See, there's our FHA, that's the help screen that you're looking at there. And then if you click on the EEM calculator processing, this gives you, for cases requiring an appraisal, it gives you the information. Appraisal logging must be completed before the calculator, and it just gives you some instructions on how to go about completing that. So if you're unsure what you need to do, or you're having an error message come up, this can give you some information on what you need to do to fill it out. Talks about what areas to leave blank on the application screen, if you have an REO, a HUD home sale, what to fill in and what not to fill in, and that type of thing. So this can be very helpful to you. Now we've also got field descriptions. You can click on that. If you just scroll to the bottom, it gives you these options. In the field descriptions area, it discusses the case number, the projected underwriter approval date, and the sales price. And it just gives you the information. The contract sales price of a HUD REO owned property. So you wouldn't fill that in unless it was an REO property. Okay, so that's the information there. Now we're going to go to a poll question before we turn this information over to Carrie. So here's our poll question. How many FHA energy efficient mortgage loans have you closed in the past 12 months? 0 to 5, 6 to 10, or 11 or more? So please answer that question.
Hey, 95% of you said 0 to 5. Good morning, Ms. Carey. We're next going to talk about calculating the mortgage. If the energy package, say a new furnace, a water-conserving toilet, and an insulated front door, meets the cost-effective test, that is, the money saved monthly exceeds the monthly cost of the improvements, the full cost of the improvements may be added to the base loan. The value of the improvements is based on the cost savings of utilities, and so the improvements do not need the support of an increased appraisal figure, nor does the borrower have to credit qualify for the increased loan amount. The appraisal is completed as is, and the energy package is added to the base loan amount based on the sales price or the appraised value, whichever is less. The maximum FHA county loan amount may be exceeded by the cost of the energy efficient improvements. However, remember the 5% figure obtained from the EEM calculator may cap the dollar amount allowed for the cost of the energy package. Okay, we've got an example of an energy efficient mortgage calculation. We got a sales price of $60,000. The improvements recommended by HERS was $3,000. The average lifespan of the improvements is estimated at 10 years, and the monthly energy savings is $40. So, using the calculations and these figures, notice the down payment is based on the lesser of the sales price or appraisal. In this example, they're both $60,000. No down payment is calculated on the energy package. This is a purchase. The maximum loan amount is 96.5% of $60,000, which is equal to $57,900 base loan amount. To recap, $57,900 base loan amount, $3,000 cost of the energy improvements, 10 years is the life of the improvements, and you get a $40 monthly savings. So 12 times $40 is $480, which is the annual savings. The energy premium is $3,706, which is the present value of the annual savings of the life of the improvement. The present value is defined as the value on the inspection date of the stream of future utility payments discounted to reflect the time value of money today. You're not required to complete the calculations. The information is clearly stated in the HERS report. Please note the net present value of $3,706 exceeds the actual cost of $3,000 in the above example, which means this is acceptable. Again, the property does not have to appraise for more than $60,000, and the borrower only has to qualify for a $57,900 base loan amount. The upfront MIP of 1% is calculated on the full loan amount of $60,900. Okay, we'll go through another example. We've got another one at sales price $60,000. This time, HERS recommends $2,000 for improvements. The average lifespan of these improvements is 7 years, and these monthly savings are $35. So, again, notice the down payment is based on the lesser of the sales price or appraisal. Again, they're both $60,000 in this example. No down payment is calculated on the energy package. This is a purchase. Maximum loan amount is 96.5% of $60,000. Again, $57,900 base loan amount. So you got a $57,900 base loan, $2,000 cost of these energy improvements. 7 years is the life of the estimated improvements, and $35 monthly savings. So 12 times $35 is $420 for the annual savings. The energy premium is $2,430, which is the present value of the annual savings of the life of the improvement. So you're going to compare the $2,430 present value, and it exceeds the actual cost of $2,000. And so again, this is an acceptable loan. Again, the property does not have to appraise for more than $60,000, and the borrower only has to qualify for the $57,900 base loan amount. The upfront MIP of 1% is calculated on the full loan amount of $59,900. We will do one more example. Again, we're going to use the sales price of $60,000. This time, the improvements recommended are $2,500. And lifespan of the improvements is 7 years. And the monthly savings in this example is $25. Notice that down payment is based on the lesser of the sales price or appraisal. Again, $60,000 for both of those. The purchase of the maximum loan amount is 96.5% of $60,000. Again, equal to $57,900 base loan amount. So we have $57,900 base loan amount, $2,500 cost of the energy improvements, 7 years life of the improvements, and $25 a month savings, which equals, $300 in annual savings. The energy premium present value is $1,736. And you are, again, not required to complete the calculations. The information will be included in the HERS report. So you're going to compare the net present value of $1,736 to the actual cost of $2,500. In this case, the savings do not pay for themselves, so you could not do this as an EEM. It would not qualify. The energy savings over the expected life of the improvements do not exceed the cost of improvements. The cost of the improvements are not eligible to be added to the mortgage amount. So again, if they're not quite clear with throwing these numbers at you quickly, this will be archived. You can go through these 3 examples again in a week and see the differences if you're not quite getting it. Streamline refinances. Energy packages can be added to a streamline refinance. The borrower's principal and interest with a new mortgage, including the cost of the energy efficient improvements, may cause an increase in the current payment provided the monthly energy savings exceeds the increase in the payment. So let's go back to that first example. The same scenario used earlier, a $57,900 loan amount at 5% interest, amortized over 30 years, giving a monthly principal and interest payment of $310.82. How much does the interest rate have to drop to reduce the monthly principal and interest by $40? Over 1%, which would be 3.845% to be the exact rate. So compared to a monthly increase in payment to pay for a $3,000 energy package at 5% interest is $15.66, and the borrower has made a capital investment in their property. If you're originating a streamline refinance without an appraisal, the original principal balance, the total loan amount of the prior mortgage, including its upfront MIP, which is reflected in the FHA connection on the netting authorization screen, substitutes for an appraised value. Now, processing. The HERS report and the FHA Energy Efficient Mortgage Worksheet calculates the dollar amount of the cost-effective energy package that may be added to the base loan. Please remember the calculation is always the lesser of the figure obtained from the EEM calculator or the actual cost of the energy package. The appraisal does not need to reflect the value of the energy added package for either new or existing construction. The present value test, the present value of the annual savings over the life of the improvements, is a statutory requirement. The present value must exceed the cost of the improvements. Now, the completed HERS report and EEM worksheet must be attached to the loan transmittal, the HUD 92900, when submitting to underwriting. Also, a copy of the HERS report and the worksheet must be included in the binder submitted for endorsement and placed behind the LT. Underwriters are to comment on the loan transmittal to indicate the loan is an EEM and reflect the cost of the energy package and the loan calculations. If a 203K mortgage, the after improved value is to be used for the EEM process. Okay, underwriting and qualifying the borrower. The mortgage is initially underwritten as if the energy package did not exist. The borrower is credit qualified and the ratios are calculated on the base loan amount prior to adding the cost of the energy efficient improvements. The FHA total scorecard may be utilized to underwrite energy efficient mortgages. Only the base loan amount is entered into total. Referring back to the earlier example, the loan amount is interfaced through AUS at $57,900, not $60,900. On top of the AUS findings, handwrite that the loan is an EEM and reiterate on the loan transmittal in the comments section, listing the value of the energy package as shown on the HERS report and your loan calculation, the base loan amount plus the cost of the EEM package. For new construction, when qualifying the borrower, the cost of the energy package is subtracted from the sales price. If you consider the statement, it becomes obvious. The energy package is excluded from the loan amount for qualification on a resale, and so on a new home purchase, the installed energy package is removed from the property value prior to calculating the maximum mortgage amount for which the borrowers can qualify. That might be a little confusing the first time, so let me read that again. For new construction, when qualifying the borrower, the cost of the energy package is subtracted from the sales price. If you consider the statement, it becomes obvious. The energy package is excluded from the loan amount for qualification on a resale, and so on a new home purchase, the installed energy package is removed from the property value prior to calculating the maximum mortgage amount for which the borrowers can qualify. So, builders may be interested in participating in energy-efficient mortgages. The energy package may already be built into the sales price, and qualifying the borrower on a loan amount minus the cost of the improvements could allow the buyers to then afford the hardwood floors, granite countertops, or whatever extra in the house.
No.
Upfront and monthly MIP premiums
Fred was just in that.
are calculated on total loan amount, the base loan amount, and the EEM package. Total scorecard. Interface the loan through total as if the energy package does not exist. FHA will recognize and accept or approve risk classification from total and allow the increase to the mortgage payment without rescoring or re-underwriting if allowed by the direct endorsement underwriter. The DE underwriter is required to attest to reviewing the calculations associated with the energy efficient improvements, the EEM calculator, the county loan limits, the HERS report, and the energy efficient worksheet.
Hey, I'm good.
How is she?
Endorsement.
As good as it can be.
Post-closing, enter the EEM improvement dollar amount
Till July.
of the energy efficient improvements that were factored into the mortgage and the appropriate energy efficient mortgage designation in the connection on the insurance application.
Yeah.
So we do green mortgages.
Existing properties, the energy efficient mortgages are insurable immediately after closing. The installation of energy package does not need to be completed prior to insuring. New construction. The energy package must be completed before the mortgage is eligible for insurance.
I'm going to do it, yeah.
Of course, on new construction, the package must be installed and be operable to obtain a certificate of occupancy.
We got to get it now.
Remember, the cost of the energy efficient improvements that may be eligible for financing into the mortgage is the lesser of the dollar amount of cost-effective energy improvements plus the cost of the report and inspections, or the amount reflected in the connection, EEM calculator, which again is the lesser of 5% of the value of the property, or 115% of the median area price of a single-family dwelling, or 150% of the conforming Freddie Mac limit of $417,000 in most areas of the country. Okay, escrowing for improvements. For existing properties, an escrow must be established for 100% of the actual cost of the energy efficient improvements, not to exceed 90 days. If the improvements are not installed within the 90-day period, the funds will be applied to the principal balance of the mortgage. The HUD 92300, the mortgagee assurance of completion, must be executed by the DE underwriter and mortgagee official to indicate the escrow has been established. If the work completed differs from the approved package, a change order along with the revised HERS report must be submitted back to the DE underwriter for approval. If changes still meet cost effectiveness test, no further analysis is required. It's the lender's responsibility to verify the improvements have been installed and complete the escrow closeout in the FHA connection to notify HUD through the connection the escrow has been cleared. I'll hesitate here for a minute. You can catch up on this screen.
He got it in. He gave his stuff to some chick. Yeah.
And again, this will be archived,
Yes.
so you can pull this up in a week, catch up what you've missed here.
Because we don't have 2 years transcripts and our investors have said we need.
Okay, here's a copy of an energy efficient mortgage worksheet. This can be found in the 4155.1 Chapter 6D or B. That's 6 Delta 4 Bravo.
I mean, I've told him 100 ways from Sunday. There's nothing I can do. And I even told him yesterday.
Okay, here are the mortgagee letters and references. Leave this up for a minute so you can write these down.
Yeah, you're in class.
Hang on, hold on a second. I'll handle it. I'm just trying to.
Now, mortgagee letter 1995-46 is old. 1993-13 is older. This mortgagee letter has factors for the present value calculations.
But our investors won't take it unless. So when will the tax transcript show up in
Well, the IRS is telling him 3 to 6 weeks. I think it will be
I'm
faster.
going to give you some post-test questions, and at the end, please don't forget to take the survey on the Survey Monkey link. If you haven't seen that before, I'm wondering what it is, please take the survey to help us improve this seminar. Okay, here's a post-test question. Can you add an energy package to a non-credit qualifying streamline, a credit qualifying streamline, a credit qualifying streamline with an appraisal, or all of the above? Okay, 89% of you say all of the above. Good. Number 2. Down payment based on the property value before or after the inclusion of the energy package? Okay, 93% of you said before, which is correct. Yeah, that's the main purpose of it. So good. Number 3 is the appraisal subject to completion, as is and after improved value, or as is with a compliance inspection report. Okay, 70% of you picked C, which is the correct answer. Number 4, what is the maximum amount of the portion of the EEM for energy improvements? Lesser than 5% of the property value, 115% of the median area price single-family dwelling, 150% conforming Freddie Mac, all of the above, none of the above. Okay, the correct answer is all of the above. And one last question before the Survey Monkey. On the Streamline Refinance without an appraisal, a blank is substituted for an appraised value. Original purchase price, original appraised value, original principal balance. While we're waiting for the last few answers, you'll get the Survey Monkey link in an email. Okay, 52% of you got C, the original principal balance. So that concludes our webinar. Hope you've enjoyed it. And remember that this will be archived in about a week. And we thank you for tuning in. Of each